And then if it asks, I'm like trying to figure like, what's the expense going to be? Is that like the literal expense that it's going to cost, or is that like the accrued expense? Like, is that accrual accounting? Like,
let's see. So with the accounts, like since there's two different pay rates, they account for kind of future liability at the current rate, and then any difference in rate the next year, they just expense what's left, if that makes any sense.
So when they're asking for the expense, they want the difference.
wait,
That we
difference?
didn't accrue beforehand. They need to know like what journal entry amount we need to make up for the difference.
It's so confusing.
Okay, are you guys looking at a specific question?
There is one about that, but I was just
Okay.
answering.
Alright, let me see if I can come up with.
That makes sense. I think I got it.
Okay, so like there's a $10 rate 1 year. That's a terrible marker.
Then like the next year, it's like $10.50.
Okay. So $10.50. Alright, maybe we can just pretend that there's one employee and just
Okay.
make it really simple. So
Yeah.
one employee, 8 hours a day, and then,
Like 5 days vacation.
right?
That's great.
Okay. So to accrue the expense for this year, we're just going to take the $10 times the one employee times the 8 hours times 5. And so, let's see, that'll be 40. No, 400. Missing the 10. All right. And so let's say in the next year, they use up like 4 of these vacation days. Okay, so how we're going to accrue this expense is at the new rate, because you don't want to get paid at the $10 rate from last year, like you want your $10.50. So we're going to take the $10.50 times the one employee times the 8 hours times the 4 vacation days that you're trying to take. And let's see, it's a little bit harder.
336.
336. Okay. Let's see. Trying to think where we go with that. Okay. So, let me go back just a second. So when we accrued this liability, we had the vacation expense, or no, salaries expense. And you would debit that for the full 400. And
Wait, so
then-
you do that for, why do you do, so we do accrued for it, or whatever?
The first
Yeah.
year one.
Yeah, so
Yeah.
this is like the first year, right?
Yes. I'll just put like 1231
Okay.
of this current year.
This year. Okay.
And then vacation liability would be your credit. And you would do that for the 400. And then for this next year, let's see. Okay. Trying to think how to explain it exactly. So basically this liability is keeping track of how many vacation days they have in their account. And so we're trying to decrease this account by paying it off. And so for this next year, I'll just put like 05. So 12/31/06, they will have taken 4 vacation days. And so we need to figure out how much.
So then they lower the vacation liability then? Or
Yeah.
debit that?
Yeah, so we have to figure out how much of this we would debit according to this rate, because that's the rate that's in here.
So you have to, oh man, that is so confusing, that's crazy. Cause like, technically they're claiming that the next, or is they took the 4 days that the following year, but they're getting paid at the rate for that year. So how are you,
Right.
so you're supposed to like, basically it's like you're trying to like take basically orange to apple, I guess, because you're trying to make it make sense from last year or something like that, or what?
Kind of, like they make up for it. So we have to figure this out for the 4 days that they took to decrease the liability at that rate. So we take the 10 times 8 times 4, so that
you
would
just
be
take-
320.
You're right.
So that'll be the vacation liability that we would debit for that amount. And then we have our salary, or no, sorry. What's the other one?
So they have to take credit for the liability.
320?
336.
Yeah. Sorry, I am forgetting.
So they're accruing for last year, but they're crediting the liability that they've already kind of like owned responsibility for last year, right? Because that's why you're
Right.
doing that.
Because like
You've already
this
prepared for
rate
that, yeah.
is in the liability account. And so we've already figured out that we're going to be paying them $336. So we would credit cash for $336. And you see how there's a difference between
Right.
the two?
So it'd be 16.
Yeah, we would have to expense the rest of that. So it would go into salaries expense.